Hi traders, you're welcome back to my video on the trading order types. Okay, it is a fundamental concept that every trader must understand. Whether you are trading forex, stocks, or crypto, knowing when and how to use market orders, buy limits, sell limits, buy stops, and sell stops can make a huge difference in your execution and overall strategy. Now, if you have ever placed a trade only to realize it entered at the wrong time, or if you have been unsure whether to use a pending order or a market order, then this video is for you. Okay, stick around as we break everything down step by step. First of all, let us talk about market orders. Okay, it is the simplest and most commonly used order type. A market order allows you to buy or sell an asset instantly at the current market price. This means this is what we call the market order, the market execution or market order. So this means that you get immediate execution, but depending on market conditions, you might experience slippage, which means your trade could execute at a slightly different price than expected. So when do you use market order? You use market order when you need to enter a trade immediately. You use market order when precision entry is not your top priority. You use market order when the market is moving fast and you don't want to miss an opportunity. But what if you want to enter at a specific price? That's where pending orders. That's where pending orders come in. All right. Now let us talk about limit orders, because under pending orders we have buy limit, we have sell limit, we have buy stop, we have sell stop. Okay. So a buy limit, let's just start with a buy limit. A buy limit order is placed below the current price. All right. Let's do a very practical example. When you want to use market order or market execution, if you click on the sell, it's going to sell immediately. You can see the trade has been executed. Let's open the terminal. The trade, this is a demo account, by the way. The trade has been executed right on the spot. If it was a buy trade you wanted, you can see the trade is going to be executed right there on the spot. But if you are using pending orders, okay, if you are using pending orders, like I said, let's start with buy limit. Buy limit is usually placed below current price. So if you want to use a buy limit, it means you must place the limit. This is where current price is, right? You must place the limit below current price. So example, let's say Euro USD is trading at 1.088, right? And you want to buy it at 1.079. You would set a buy limit order at that 1.079. So you can see 1.079, okay? And then you click on place. So you can see that a buy limit has appeared at that price level. So if the price reaches this level, if the price continues coming down and it reaches this level, your trade will get executed automatically. Now let's talk about sell limit. Okay, sell limit is just, the reverse, is the opposite. All right. It is placed above the current price when you expect the market to rise to a certain level before reversing. For example, Euro USD is trading at 1.088, but you want to sell it at 1.093. So you just set a limit at 1.093. If the price moves ahead, You click on place. If the price moves ahead and reach that level, your trade will get executed. So when do you use limit order? You use limit orders when you want a better entry price. Okay, when you expect a reversal at a key support level or resistance level, that's also when you use limit orders. Okay, or when you don't want to sit in front of the screen waiting for price to reach your target, you can also use limit orders as well. All right, then next we have, let me just close all this. All right, now we are going to talk about buy stops and sell stops. Okay, let's go back to pending orders. Okay, so buy stop is placed above current price, meaning you want to buy when price breaks through a certain level, signaling strong bullish momentum. For example, Euro USD is trading at 1.088, right? And there is a resistance level around here. So assuming you are expecting this resistance to be broken, and then you're expecting that after that resistance is broken, that the price will continue going up. So you can set a buy stop above that resistance, maybe around 1.098. All right. So if you are setting at 1.098, it means that when the price gets to that level, if you believe that breaking above this resistance will result in further upside, you can set your buy stop at that level that you expect. And then once price gets there, it's going to get triggered. Okay. On the other hand, a sell stop is placed below current price. All right. Perhaps now you believe that if price should break, maybe you can see that the price has been going up for a while, and then you are expecting that if this trend line should get broken, perhaps a sell move is going to continue, right? And it looks as if the trend line has already even gotten broken. So you are expecting that sell move is going to continue. Then you decided to set a sell stop perhaps around here, confirming that, you know, even after this particular level has been breached, perhaps the sell is going to continue. So you can just set your sell stop. It must be below current price. Let's say around 1.075. Okay, 1.075. So it means that if price gets to that level, your order is going to get triggered automatically. So when do you use stop orders? You use stop orders when you want to trade breakouts. You use stop orders when you expect momentum to continue after breaking a key level. You use stop orders when you don't want to enter too early and risk getting trapped in a false move. Okay, so now that we have covered all the order types, let's quickly summarize when to use each one. You can use a market order if you need to enter immediately. You can use a buy limit or sell limit if you want a better price and expect a reversal. Then you can use a buy stop or a sell stop if you want to enter on a breakout with momentum. Okay, so understanding these orders allows you to control your entries better, reduce risk, and automate your trading so you don't get glued to the screen all day. So there you have it, trading order types explained. Now you know exactly when to use a market order, buy limit, sell limit, buy stop, and sell stop to enter trades more efficiently. Drop a comment below and let me know which order type you use the most in your trading. Drop a comment below and let me know, okay? And if you got value from this video, hit that like button, subscribe for more trading content, and turn on notifications so you never miss an update. Thank you for watching, and I'll see you in the next video.